So welcome to today's presentation. My name is Peter Yosef, Senior Market Analyst at IronFX. In front of your screens, you have the US dollar index. It's the 4-hour chart. All charts to be presented are to be of the same time frame. Mind you that today we're going to be mixing fundamentals with technicals once again. We can see the wide drop of the US dollar index yesterday practically, which tended to be reversed during today's European session. I would note definitely the Fed's interest rate decision. That was a very interesting event in the sense that, the Fed, as was widely expected, hiked rates by 25 basis points. That was not the big issue here. On the other hand, in the accompanying statement, the bank more or less allowed that it will continue monitoring the economic outlook and financial data in order to assess the situation practically on a meeting by meeting basis. And more or less, that may have enhanced expectations of the market to actually see the bank pausing its rate hiking path over the summer. Mind you that market expectations currently are for the bank to remain on hold over the summer months and then start cutting rates from September onwards. And we're talking about definitely a cut in September and one more in November, and we may see one more cut in December. So it's going to be interesting to see how Fed policymakers will be positioning themselves in the following days. And we'll make a start with St. Louis Fed President Bullard. Usually Bullard is more leaning towards the hawkish side and may more or less imply the need for more rate hikes, which is a scenario which cannot be ruled out exactly here. It would be interesting to note also that Fed Chairman Powell, in his press conference half an hour after the release of the interest rate decision, had highlighted that the bank does not have any plans to start cutting rates, in contrast to market expectations. And I would be more or less noting that this statement tended to imply that the bank remains, I wouldn't say in a wait and see position, but definitely has the intent to keep monetary policy settings tight for a prolonged period of time. Now, on a technical basis, the US dollar is edging higher during today's European session, and that may allow it to stabilize somewhat. Mind you, though, that attention now starts shifting towards the US employment report for April due out tomorrow. The expectations are for the NFP figure, the non-farm payrolls figure, to drop considerably. The unemployment rate to tick up, and at the same time, the average earnings to remain unchanged at 4.2% year on year. Overall, these data seem to be aligning towards an easing of the tightness in the US employment market. Especially worrying is that the NFP figure is expected to drop below 200K. And I would be noting here that there was a release yesterday which more or less tended to pass under the radar, as we had the ADP national employment figure. It was expected to drop slightly. It didn't. It actually came out. Sorry, it was expected to increase slightly, and it didn't. It actually came out far higher than expected, actually double the amount at over 290K. And that more or less may imply that the US employment market still has the ability to actually create jobs in the private sector. I would be noting here that, there are lots and lots of traders which tend to have a positive correlation in the minds between the ADP employment figure and the NFP figure. I wouldn't say that. We had a number of times where practically the ADP rose and the NFP dropped, and vice versa. And it's understandable in the sense that the NFP figure includes also the public sector, and there are a number of differences there which may alter the actual results. We do not actually support this notion of a positive correlation between the two readings. On a technical basis, now we can see how the price action of the US dollar index rose up during today's European session after flirting consecutively from yesterday's American session with the lower Bollinger Band. It was something which was at some point expected anyway. And that may allow for some stabilization of the index. Mind you, the RSI indicator bounced on the reading of 30 and rose higher. It's currently at 43.5 and still rising, so we may see it aiming, if not reaching, the reading of 50, which, if the indicator remains there, would allow practically, or could allow, to be more exact, could allow for the price action of the US dollar index to stabilize somewhat or remain in a sideways motion between the R1 101.55 and the S1 100.65. I would be noting here that should the bulls take over, we may see the price action of the US dollar index being on the rise, breaking the R1 101.55 resistance line. Sorry, let's readjust. And that would be something like breaking under R1 and starting to aim for the R2 102.45. On the flip side, should the bears take over, I would require nothing less than a clear break of the S1 100.65 and the price action to start aiming for the 99.80. It's interesting as the moving average is okay. The 20 moving average, you can see in blue here, has started to shift slowly but steadily to the downwards, so reflecting practically the downward movement over the past 2 days. But the 50 and the 100 moving average are still rather flat with no clear direction. Maybe the 50 moving average has some slight tilt to the downward side. It's going to be a very, very interesting development in the next 24 hours, especially given that the market comes out of the Fed's interest rate decision and now is about to reposition itself ahead of the US employment report for April is being released. Let's move to another interesting pair, and that would be Euro USD. Now, Euro USD was on an upward trajectory, yet seems to have hit a ceiling at the 1.1075 resistance line. You can see it right here. So we tend to maintain our bias for the sideways motion to continue. It's characteristic also that the RSI indicator has dropped from the reading of 65 all the way down to, that should be 50, 53. That may imply also that the bullish sentiment of the market has faded away. So for the time being, we see a continuation between the R1 1.1075 and the 1.0925. But we have ECB's interest rate decision later today. I think it's going to be key about the pair's direction. And the bank is expected widely to hike rates by 25 basis points. Currently, Euro OIS implied probability of 79 to 80% for such a scenario to materialize. It's interesting, though, that the rest of Euro OIS, the other 20%, tend to imply that also a 50 basis points rate hike is possible, which exactly highlights the hawkishness in the market's expectations for the bank. even should the bank hike rates by mere 25 basis points, that may be accompanied also by a statement that more or less will include a hawkish sentiment. And the main reason we are highlighting this prospect is exactly the fact that inflationary pressures in the Eurozone seem to be holding the easing. It was characteristic how the preliminary HICP rate for the Eurozone for April, which was released yesterday, most probably not current remained practically near the same levels, actually ticked up. And that implies that inflationary pressures are still high and present in the Eurozone. And that may force exactly the bank to take a stronger action or even maintain high rates for a prolonged period of time. So I would expect the bank to hike rates by 25 basis points as the market expects it as well. But I would also add that we may see a hawkish accompanying statement, which could provide some support for the euro. On the flip side, should the bank start hesitating, which is also a possible scenario given that we have an easing of economic activity and a contraction. It was characteristic, the contraction of economic activity for the German manufacturing sector. Now, should we see such hesitation and doubts about future rate hikes in ECB's accompanying statement, we may see the hike turning into a dovish hike. And that could weaken the euro, which may force the pair to drop considerably. I would expect that should the bank actually proceed with a cautious, or if you prefer, even a dovish accompanying statement, then we may see the weakening of the euro being asymmetrically strong in comparison, say, for example, with a possible hawkish content in the accompanying statement, as the latter is, I would say, mostly expected by the market. So we have mentioned how we expect the pair to remain for the time being as a base factor, practical base scenario between the R1 and the S1. We highlight the ECB's interest rate decision, which could and actually may pretty well alter the pair's direction once again. And should the bulls take over, we may see the price action of Euro USD rising, breaking the R1 1.1075, and in that case start aiming for the 1.1220. On the other hand, should the bears be in charge, I wouldn't be surprised to see the price action dropping. And for bearish outlook, I would require a clear break of the S1 1.0925, a level which provides support a number of times. And in that case, the gates would be open for the 1.0760. Let's move now to cable, GBP USD. So we seem to have some bullish tendencies here. It's interesting how the pair was able to break above the R1 1.2540. Now, the boys at research more or less highlighted drilling to the 1 hour chart. Let me show you something. They highlighted this. So you can see in the 1 hour chart an upward movement being formed where you have consecutive higher troughs and higher peaks, which would be meeting the definition of an upward trend line actually. But given that we had seen similar movements here and they proved to be a false break, I would be holding my horses. Back to the forward chart. So once again, We highlight the prospect of a bullish outlook, but for that to materialize, I would require the pair's price action, cable's price action, to actually bounce on the upward trend line we have just shown and start aiming for the 1.2770. Should the upward trend line be broken, possibly also the R1 be broken, the 1.2540 resistance line, which by the way we have to switch now given that the price action is above it. We have to turn it into support line. There you go. Let's go hunting also for a new ultimate resistance level. Going back. Here we have one interesting peak here. But to tell you the truth, I find this one more tempting. Let's keep this one. And that would be in red. The 1.3290 resistance line. Locking it in, readjusting the chart. Let's also correct the labels, repositioning them, and correcting the content of the labels. It seems a little bit wide, doesn't it? And the actual price action does not have the necessary volatility. Let's lower it. Going back. It would be the 1.3150. Readjusting. Repositioning. So the 1.20 now goes to 1.2185. The S2 is being placed at 1.2350. The S1 at 1.2540. The R1 at 1.2770. It's a wide range. The R2 at 1.2980. And the R3 at 1.3150. Locking everything in. So for the time being, we tend to maintain a bullish outlook for the pair. It's a very slight one. The RSI indicator rose slightly, yet corrected a little bit lower. It's currently in the midst between the 50 and the 70 average. Is actually at 59.5. It's a very questionable bearish outlook in the making. On the one hand, should the bulls maintain control, we may see the pair more decisively actually starting to aim for the R1 1.2770. On the other hand, there seems to be a relative indecisiveness of the market, which may allow the price action to remain in sideways manner. And that would practically force the pair's price action to break the pre-mentioned upward trend line, possibly also break the S1 1.2540 and remain just below it. And for a bearish outlook, we would require, okay, I know it's rather improbable, but it's still a possibility and should be covered. we would expect the price action of cable to drop, break the upward trend line, break the 1.2540, and aim, if not breach, the 1.2350. That would be a very intense bearish outlook. Let's move to USD/JPY. Mind you that the pound's going to be having some interesting releases next week, among the GDP rate for Q1. So we may see volatility being on the rise once again. USD/JPY, a pair which may have been the one reflecting the best out of the weakening of the US dollar. Definitely the 135.15, which has been broken support line, has now to be turned into resistance line once again. Let's go hunting for a new ultimate support line. Unlocking the chart. I would be noting this through here. We have 1, 2 touches. And that would be in green. The 127.50. We're adjusting the chart. Widening a little bit. Overall, we tend to highlight that USD/JPY may remain US dollar driven. On the other hand, though, on a more fundamental level, I would be noting also the possibility of seeing safe haven inflows, outflows for the Japanese currency, given its dual nature as a national currency and a safe haven trading instrument. However, for the time being, I would expect it to remain USD driven mostly, once again. We are one which is now being placed at the 135.15. The S1 at 133.55. The S2 at 130.40. And the S3 at 127. So we tend to maintain a bias for the sideways motion to continue, but to tell you the truth, the bears have not left the scene here yet. And let's draw a downward trend line just to see the limitations, and it's just about to test them. On the other hand, note how the RSI indicator remains low. It hit the reading of 30. It's actually right now at 33.4. So more or less, there's still a residue of bearish sentiment left for the pair in the market, which may force it downwards, in which case should we see the bearish sentiment being extended and possibly forcing the price action lower. A bearish outlook would look like the price action dropping, breaking the 133.55, which provides considerable support here, as well as a resistance here, and start aiming for the 130.40. On the other hand, should the pair remain in a sideways motion between the R1 and the S1, we would expect it to first break the downward trend line we have just drawn and exactly signal the end of the downward movement. For a possible bullish outlook, once again, we would require a clear break of the downward trend line, but in that case, for a bullish outlook, we would also require a clear break of the R135.15 and the price action to start aiming for the 137.75. Let's move to USD/CHF. Substantial strengthening of the pair rise. Once again, mostly driven by USD. And in this case, yes, the downward motion has been interrupted. Let's have a look at that. It's a clear-cut breaking of the downward motion. So we switch our bearish outlook here, and that would be in favor of a sideways movement bias initially at least, possibly above the 0.8860 support line and below the 0.8935. It's going to be an interesting next 24 hours for the pair, given that on the one hand, the US dollar side, we may see the market repositioning itself ahead of the US employment report is released for April. That's due out tomorrow. But the Swiss side, the CHF side, may also find it a little bit more volatile, especially during tomorrow's European session, as we're getting practically the CPI rates of Switzerland. That would be the one. The other news which I would be highlighting here would be that SMB chairman Thomas Jordan will be making statements tomorrow, and most probably will be including monetary policy, may imply some intentions on behalf of the bank about its further plans, which could shake up the Swiss a little bit. Once again, main scenario for now is that most probably the pair may stabilize between the R1 and the S1. Should the bulls keep control and extend the power, we may see the pair rising, breaking the R1 0.8935, and in that case we may see them aiming for the R2 0.9020. On the other hand, should the bears be in charge, we may see once again the pair dipping, breaking the S1 0.8860, and start to actively aim for the 0.8760. Let's have a look at the Aussie. It's interesting how AUD USD, despite the extensive weakening of the US dollar, did not reflect that. It actually remained in a sideways motion. It's actually a very clear-cut sideways motion. And despite it being between the 0.6625 support line and the 0.6755 resistance line, the actual range within it trades is far narrower. The RSI indicator is practically running along the reading of 50, implying a rather indecisive market, which could allow the sideways motion to be maintained. Note the flattening out of the 50 and the 100 moving average in green and orange respectively, while the 20 moving average in blue has just crossed the 51 and seems to be slightly rising. Yet the price action tends to remain rather stable. So I would expect the sideways motion to continue for here. On a more fundamental level, we have some worries which are quite substantial about China. We had on Saturday the release of the National Bureau of Statistics of China, and it was the manufacturing PMI figure for April, and showed that the economic activity in the manufacturing sector of China in the past month contracted as the indicator's reading dropped below the reading of 50. During today's Asian session, we also had the Caixin manufacturing PMI, which is private, and it actually also dropped below 50. So practically the contraction of economic activity was confirmed. And that tended to exactly highlight our worries about the outlook of the Chinese economy, given that it's mostly manufacturing based. Now, should that be verified, we may see Aussie bears coming in. Why? Because China and Australia have very close economic ties, especially given that Australia is exporting a high amount of raw materials to China. And should economic activity contract, that may also have an adverse effect on the demand side of raw materials from China towards, or if you prefer, for Australian raw materials from China. Should the bears take over, we may see the Aussie dropping, breaking the S1 0.6625 and start aiming for the S2 0.6520. On the other hand, should the bulls be in charge, we may see the price action rising, breaking the R1 0.6755, which would be paving the way for the 0.6855 to be aimed for. Now, in contrast to other pairs which we saw earlier, the Aussie seems not to be USD driven. And that's a very interesting element. Okay, let's have a look at USD CAD. USD CAD, which also failed to benefit, actually to weaken, to drop, given the US dollar weakness. Once again, another commodity currency seems to remain on its own course, respective of developments happening in the US. And it remains in a sideways motion, pretty narrow sideways motion between the 1.3645 and the 1.3545. The actual movement, though, is in a far narrower range. The RSI indicator is running along the reading of 50, implying a rather indecisive market here. And may I add here also the positive correlation which is viewed on by traders between the Canadian dollar and oil prices. Should oil prices be on the rise, the CAD benefits. Should oil prices be dropping, the CAD suffers. And in this case, it's understandable given that Canada is a major oil producing economy. So it has a substantial effect on the Canadian economy and hence the Canadian dollar as well. So we have mentioned that our base scenario remains a sideways motion. Mind you that tomorrow we're getting from Canada at the same time as the US employment report for April, also Canada's employment data. And it's going to be a very interesting moment for USD CAD, as we may see diverging forces exactly ripping apart the pair. In case we see the bulls taking over, I wouldn't be surprised to see the price action rising, breaking the R1 1.3645 resistance line, and start aiming for the R2 1.3810. On the other hand, should the bears be in charge, we may see the price action of USD CAD dropping, breaking the S1 1.3545, and in that case, the way would be paved practically for the 1.34 support level. Mind you that the 1.34 is a level well tested, both to the upside as well to the downside. Okay, let's have a look also at the Kiwi. The Kiwi, which remained rather stable. And here we have a number of interesting elements. On the one hand, we have an upward trend line which is actually still valid. It was tested, it held its ground, the pair was pushed slightly higher. On the other hand, though, we tend to maintain our worries about the bullish outlook, and we highlight to that purpose the fact that the last peak was lower than the prior one. So that may be creating practically some problems for the bulls to advance further. The RSI indicator is above the reading of 50. It's actually at 61.8, which tends to remain rather bullish. So there seems to be a bullish sentiment left in the market for the pair. Also note how the 50 moving average has risen and has broken or is about to break above the 100 moving average, also implying some bullish tendencies here. Should the bulls maintain control as we expect, we may see the price action breaking the R1 0.6270, forming a higher peak. And should the R1 be broken, the next possible level aimed for could be the 0.6360. On the flip side, should the stabilization actually be successful and the pair remains at near the same levels it is currently, then we may see the price action of NZD/USD clearly breaking the upward trend line we have just mentioned. And actually that would be, in my opinion, the first substantial signal that the upward movement of the pair has been interrupted here. For a bearish outlook, I would require the pair to drop, clearly break the upward trend line, but I would require it to also break below the 0.6190 and start aiming for the 0.6090. Okay, let's move now to gold, which reached new record highs here. It is. And definitely we have to make some readjustments. I would be noting this level. 2050. 45 to be more exact. 50. Okay, we definitely hold the R1. That's clear. But in this case, I would be adding also another support line here. Nice sideways motion with an upper boundary at this level. Also note how it was tested here, here, and here. And that would be the 2010. Once again. Okay, let's correct the labels and let's have a look at what we have here. I could actually be discussing here also the 20,020. A little bit too high. Somewhere here. 2012. 13. 15. Yeah. So let's readjust the levels. $2050 for the R1. 2078, which mind you should be a new record high. We'll have a look at that later on. 2100, the last resort for the bulls. Let's move now to the support lines. starting with the 2015. $1,970, and then we have the 1935. So levels are set. The direction, I think, is clear. We have a nice upward movement. There you go. So, ladies and gents, we have a bullish outlook. I would be advising, though, some caution here. And the caution derives practically from the fact that the RSI indicator is slowly but steadily correcting lower. And it's currently testing to break below the reading of 70, which, if the drop extends lower towards the reading of 50, would be implying exactly a fading away of the bullish sentiment in the market for the precious metal. And that may force gold's price action to stabilize, and should it stabilize, then I would expect it to clearly break the upward trend line we have just shown and remain in the range between the 2050 resistance line and the 2015 support line. It's movement like this. But once again, watch out for a possible break of the upward trend line. That would be a first signal here. On the other hand, should the bulls maintain control, and I think that would become more obvious if we drill into the half-hour chart. Allow me, please. You can see how the price action practically is bouncing on the upward trend line. So it seems to be holding. So the bullish outlook is still in effect here. Should the bulls maintain control, though, I would require them to clearly break above the 20,550, which provide resistance here, and then probably taking another swing at the 20,078. Sorry, 20,178. And if we drill to the daily chart, weekly chart, yeah, then you can see how exactly this peak here is slightly higher than this one and this one. A very, very interesting chart. Back to the forward chart. Now, for a bearish outlook, we would expect the price action definitely to drop, but we would require it to break the upward trend line, once again signaling the end of the upward motion, or at least interruption of it. But also I would require it to drop below the S1 20,015 here. A level which could be a little bit higher now that I'm looking at it, at 2020. And the reason I'm saying this is exactly the resistance provided here. The big question which arises now is the following. Is there a mid-level between these two? And I would argue that there is, especially looking at these peaks here and this true here. Could be, could be not. Also note the peaks here. I'm keeping that. That would be the 1990. Yeah, that's more obvious. So the S2 is being set now at 1990 and the S3 at 1970. Okay. So should the bears take over, watch out for the first signal breaking of the upward trend line. However, for the bears to take over, that would mean that the price action is going to be dropping below the S1 2020. Nothing less. Should the S1 be broken, next possible level would be the 1990. For the time being, though, we tend to maintain a bullish outlook for the precious metals price. Okay, let's have a look at your stock markets. I would like to see Nasdaq. Okay. Nasdaq would dropped somewhat lower than the R1, 13,145. And okay, the sideways motion seems to be maintained here. On a fundamental level, I would be noting that US stock markets seem to be in a very peculiar position right now. On the one hand, we had the Fed hiking rates, but the market's expectations for it to remain on hold seem to be enhanced, so that may provide some support for US stock markets today. On the other hand, I would be noting that there are market worries about a possible recession in the US economy. The third element to take notice of would be practically the repositioning of the US stock markets ahead of the release of the US employment report for April. And the fourth element would be the earnings reports, which are due out. So, for example, today we have a number of companies that would be, we have Moderna, we have Ferrari, and we highlight Apple. I think it's going to be the crown of earnings reports for today. It's a very interesting company, not only due because it's well known and sizable, etc., but it had some very, very interesting developments. Remember when we were talking about Apple and its high-yielding deposit account, which it created as a product with Goldman Sachs? It seems that it has received considerable deposits. I think it's around 400 billion US dollars. So that's a substantial new business of Apple, which I think investors will be keeping a close eye over the earnings report for the day. And should the readings be better than expected, we may see Apple's share price rising. Mind you that Apple also opened its first store in India, which is another positive as it practically expands not only from sector to sector, but also geographically. And that could also provide some support. On the other hand, though, once again, should market sentiment, or if you prefer, market expectations for the bank to remain on hold throughout the summer be enhanced, that could provide some support for US stock markets. Also, I highlight the release of the US employment report with the NFP figure expected to drop, and should there be a slack in the US employment market, or at least an easing of its tightness, once again, that could provide some support for US stock markets, as that would imply practically that the Fed may ease on its hawkishness somewhat. I should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.
Everyone, my name is Emily. In today's session, we will look at news trading on economic releases. This trading strategy is appealing to many short-term forex traders. As markets move because of news, the release of economic data is often the most important catalyst for short-term movements. Basically, this trading strategy involves trading around significant forex news events, such as key economic releases from the countries whose national currencies consist of the major currency pairs. Because of the strong influence on a currency's valuation, a forex trader can take advantage of an important news release to potentially benefit from those fluctuations. There are 8 major currencies available for trading, so there is always a piece of economic data scheduled for release that forex traders can use to make informed trades. 7 or more pieces of data are released almost each weekday, except from holidays, from the 8 major most followed countries. Therefore, for traders who choose to trade news, there are lots of opportunities. As the US dollar is on the other side of 90% of all currency trades, US economic releases tend to have the most noticeable impact on forex markets. If you want to trade news successfully in the forex market, you need to know when reports are expected and understand which releases are most important under the economic conditions at the time. Generally, the most important information relates to changes in interest rates, inflation, and economic growth, like retail sales, manufacturing, and industrial production. To sum up, it's important to do your research and stay on top of economic news in order to reap the rewards. Thank you so much for watching us today, guys. Bye-bye.
Before we start webinar today, I hope everyone is ready to learn. Our topic for today is to know your charts. Okay, hold on, give me a moment. Okay, is to know your chart, which is the Heiken Aishi. So we're gonna be understanding the Heiken Aishi today. Before we start, I just want to remind you guys that today's webinar is only educational. It is for educational purposes. Anything I share in this webinar should not be construed as trading advice. Trading may not be suitable for everyone, so do be cautious, especially if you are new to the game. Okay, if you have questions throughout the webinar, you can ask. You don't have to be shy. The whole point of these webinars is to guide and assist you guys. Okay, cool. I'm going to move on. Okay, so I'm gonna introduce myself, a little bit about myself. My name is Cassandra. You can call me Cass. I am an investment analyst for the award-winning research firm Everett Fortune Group. I'm also a prop trader. So, I mean, that's a little bit about me in background. I worked in the bank. I worked with the airlines. I was an air hostess. I majored in law, majored in business. But I think more importantly, when it comes to trading, my experiences in trading is that one thing that I am quite proud of is that I have passed multiple prop trading tests. So these prop trading tests, I'm not sure if you guys have heard of it. Such companies are FTMO or MyForex Funds. So to pass these tests, you will require a trader would require to do 8 to 10% a month without touching the drawdown of 5% a day and 12% throughout the entire challenge. So I've passed those tests multiple times, and I've used that with identifying key levels of reversals through combinations of supply, demand, and Fibonacci confluence while using trend as my main decision maker. Okay, this is important because our topic for today, which is the Heiken has a lot to do with trend. Okay, so it's going to be very important in identifying entries. Okay, so our agenda today will be to understand what the Heiken Aishi is. I really don't know if I'm pronouncing it right because it is a Japanese word. The best bet I have is that it's called Heiken Aishi. Okay, I know how to use it, just don't know if I'm pronouncing the name right. How is it different from the normal candlesticks? Okay, how to use it in trading? How can we use this with different indicators? And finally, we will be crafting a strategy using the Heiken Aishi. Okay, any questions so far? Okay, cool. Okay, so what exactly is the Heiken Aishi? Can you guys let me know in the chat box if you guys have even heard of the Heiken Aishi before? Do you know what it is? Do you have any idea? No? Okay, never heard of it. Is the chat box disabled? Okay, hi Christine. I don't think it's disabled. I do see your message. But the funny thing is, I don't know if the others are able to answer me because I've been asking for the last 10 minutes since I started if everyone can hear me clearly, if you guys can see my screen. Usually, you guys are very active in answering like, yes, I can see your screen, I can hear you clearly, but today no one's answering, so I don't know if there is something wrong with the chat box. But the fact that I can see Christine's answer means that it should be okay. Okay, now I see Victor's answer. Okay, thank you. Brian. Okay, Brian was saying that he did answer, but I wasn't responding to his answer. So I'm guessing the chat box is not working well, but you guys are talking to me on the Q&A session. So with Zoom, there's two places that you can send in your question or you can talk to me. One is via the chat. Okay, so I'm guessing you guys were talking to me through the chat earlier on. That's why I wasn't seeing your response. And now I see Christine, Victor, and Brian answering me on the Q&A section. So if you guys have any question, just go straight to the Q&A box and ask at the Q&A box. Okay, thank you, Victor, for clarifying that you can hear me and you can see my screen. I was so worried the entire time. I wasn't sure because usually you guys would have answered me by now. Okay, so what exactly is the Heiken Aishi? So Heiken Aishi also spelled with an E sometimes. So it's sometimes spelled with Heiken. Ashi means the average bar in Japanese. So it literally means average. A lot of what I'm going to share with you guys in the front part of the webinar will be a bit confusing. It was confusing for me as well when I just learned this, but it's not important. More importantly, you need to know how to use the Heiken Aishi. Okay, so it's gonna be confusing, but it's okay. It's more to like, it's good to know. The information I'm sharing is just more like good to know. Towards the end of the webinar, when we craft our strategy, that is the important part. That's the important part because then you will learn how to apply the Heiken Aishi. So the Heiken Aishi technique can be used in conjunction with candlestick charts when trading to spot market trends and predict future prices. So how Heiken Aishi is used, for me especially, I mean, I'm sure there are many ways to use it for different traders, but how I use it particularly is to spot trend. It is so crucial. You know how a lot of time price is going in an uptrend, it's going in a constant uptrend or it's going in a constant downtrend. For example, I can give you guys XAUUSD right now, gold. Gold has been going in a downtrend for the longest time. Okay, another one is EURUSD. The euro has been going down in a downtrend for the longest time, right? So the Heiken Ashi can actually help you spot that point of reversal and get in at the reversal. So as it's going down, it will make a reversal to make the recovery to go up. Using the Heiken Ashi, you'll be able to spot where to get in for the buy. Okay, sorry, I do see messages here. Let me try to figure this out. Okay, cool. Okay, so it's useful for making candlestick charts more readable and trends easier to analyze. For example, the trader can use Heiken Ashi charts to know when to stay in trades, when a trend persists, but get out when the trend pauses or reverses. Okay, so we're gonna look at examples for that later. Most profits are generated when the markets are trending. So predicting trends correctly is super necessary when you are using this technique. Okay, let's move on. So this is the normal candlestick pattern, and you can see this is the Heiken Ashi. I know it looks like when you look at the structure of it, it looks quite similar, as in you can see there's a low here, you can see price did a swing low here, you can see price did a swing high here. But if you look closely, the difference with the Heiken Ashi and the normal candlesticks is that the Heiken Ashi starts in the middle of the last candle. Do you see? So it's very confusing for people who only know the normal Japanese candlesticks. So normal Japanese candlesticks, you can see that, for example, the close was here, right? The close was here and the open is just next to it. There's rarely a gapping when it comes to Japanese candlesticks. But with Heiken Ashi, no matter where the close and start is for the normal candlesticks, with the Heiken Ashi, you can see that the start is usually in the middle of the last candle. Okay, it is more often not in the kind of like the center of the last candle. So it can be confusing for people who don't understand this candlestick, this type of candlestick or way to read the charts. Okay, so I'm going to explain a bit the textbook meaning for Heiken Ashi and a little bit of understanding. So the Heiken Ashi is the type of price chart that uses average to show the price movement of an asset. This chart used as a form of technical analysis to look at the asset's price movement with regards to overall trend. By being able to see the overall trend more clearly, you can make a better informed decision about whether to enter or exit a trade. Like regular candlesticks, the Heiken Ashi candle will display 4 different price level, which is the low, okay, the highest point, the opening, and the closing of the candle. But it will use data from a current and previous session to derive the values. That being said, the Heiken Ashi charts can be applied to the same time value as regular candlesticks charts, making them useful as part of a scalping, day, or position trading strategy. A lot of people also use it for swing trading, as can be seen in the below. In this comparison, that can actually have a smoother appearance than regular candlesticks. Okay, it's smoother because it always just starts in the middle of the last candle or somewhere in the middle of the last candle. Okay. Okay, so what is the Heiken Ashi formula? Why does the candle start in the middle of the last candle? So the Heiken Ashi formula is a method used to calculate each candlesticks on the chart. Some of the formulas or calculations are more complicated than those used for a standard candlesticks. Here's simplified version, okay, of how to calculate the open, close, high, and low for Heiken Ashi candlesticks. So the open, which is here, the open of the candlesticks is the equivalent to the open of the previous bar. So you need to get the information from the previous candlesticks, okay, plus the close of the previous candlesticks and you divide that information by 2. Okay, so let's pretend this is the current candlesticks, this is the open. So you're getting the high and the low, the open and the close, and then you're going to divide that by 2. The answer of that will give you the open for the next candlestick. Okay, that's why the HA, the Heiken Ashi, always starts in the middle of the last candlesticks, or somewhere in the middle of the last candlesticks. Okay, because it is just like the average of the last candlesticks. Okay, so the close will be the open, the close, the high, and the low of the current candlesticks, and you divide that by 4. Okay, again, for those who are confused, don't worry, you don't really have to remember this. Whatever I'm sharing is more to like, it's just good to have, like, it's good to know, right? It's good to learn this information, but it's not like crucial when you're doing charting. Okay, so the high is the maximum value from the high and open or close of, hi Simone, I see more and more people joining, the current period, and the low is the minimum value from the low, open, and the close of the current period. So how do you read a Heiken Ashi candlesticks? When reading a HA candlesticks, you look at their wick, body, and color. Okay, so the color, it's either green or red. Okay, the wick, you need to know if the wick is on the top of the candlesticks or the bottom of the candlesticks. I know right now it just looks like both sides had a wick, but later on I'll show you more examples where the Heiken Ashi only wicks on one side. So it usually wicks on the upper part of the candlesticks or the lower part, and the other side that doesn't wick is usually flat. Okay. And the body. Okay, so the top of the upper wick is the highest value of the candle, and the bottom of the lower wick is the lowest value of the candle. The body is the difference between the session's open, close prices. If the candle is green, the closing value is greater than the opening value and is represented at the top of the body. If the candle is red, the closing value is lower than the opening value and is represented at the bottom of the body. Okay, everyone good? Everyone following? Is this too confusing? For those who are like a little confused, you don't have to worry. Like when we go to TradingView later, you see how there's actually so many different types of candlesticks patterns. This is just one of it. It's a very useful way to trade, but it's just one of it. Okay, so how to use the Heiken Ashi chart? There are a few ways to trade using the Heiken Ashi chart. First, understand each candlestick will tell you something about the price trend. For example, a long-bodied green Heiken Ashi candle with no lower wick. Okay, you can see that the wick is only on the top. There's no lower wick. Is considered indicative of a strong upwards trend. Do you see how this is so different from the traditional Japanese candlesticks? If this was the Japanese candlesticks, if you see a long wick on the top, you will immediately think, oh, there is a rejection. There's a rejection, that there is weakness. That's why the candlesticks is making this long wick. Okay, it is rejecting. There is bearish rejection. And you might be thinking, oh, the bearish momentum may be strong. Okay, it is totally the opposite for the Heiken Ashi. The Heiken Ashi is when you see the wick on the top side rather than the bottom side, that is an indication of strong uptrend momentum. Okay, so it is opposite from your traditional Japanese candlesticks. Okay, and this is very important because this is what you use to identify trend when you are trading. Okay, so traders who have bought into the market might use these Heiken Ashi signals as indication to hold on their position in an attempt to maximize gain in an uptrend, because once you see this wicking on the upside, you will see, okay, you will think to yourself, okay, strong bullish momentum, right? Strong bullish momentum. So what you're going to do is you're going to see the next candlestick. If the next candlestick also shows another wicking on the upside, it just means, okay, continuation of that strong bullish trend. And then another one is just confirmation of another strong bullish trend. So the Heiken Ashi, again, like I said, is very, very useful in identifying trend. So you use it to continue playing the trend, or you use it to get out when you see a trend reversal. Okay. Everyone good for now? Okay, cool. I'm gonna show you the next example. Okay, so this is an example of how the Heiken Ashi would look like on the charts. Okay, so you will see wicking on the upside. The upside, this is confirmation of bullishness, confirmation of bullishness. So you keep holding your buy entry, right? You keep holding your buy trade. You hold your buy trade, you hold your buy trade, you hold your buy trade until this doji looking thing or this spinning bottom, spinning top looking thing comes out. And then you see a wick at the bottom side of the candle. That is Heiken Ashi's first sign to you as a trader that, hey, the bullish momentum is weakening. Okay, the uptrend momentum is slowing, or there may be a possible reversal. Okay, and then you see the next candle, and the next candle, true enough, it turns red. Number one, it turns red. Number two, the wick appears on the bottom of the candle, signaling and confirming that yes, the bullish momentum has ended and now the bearish trend may have started. Okay, so this is exactly how you use the Heiken Ashi in terms of playing the trend. I really love the Heiken Ashi, honestly. It's very, very useful. Okay, so let's move on. Okay, so this is another example. You can see really strong downtrend, wicking on the bottom part, which is confirming the downtrend. Bearish momentum, bearish momentum, bearish momentum, bearish momentum, bearish momentum. All the way, you can see all this bearish momentum. And suddenly this doji looking thing, or spinning bottom, I would say, candlesticks appear and you see a wick on the top side. Okay, this will suggest, this is the first suggestion. It's not confirmed, of course, it's not confirmed, but it's more like a suggestion from the Heiken Ashi that, okay, trend, that downtrend may be ending, okay, and it is losing momentum, and there is a possible trend reversal. Okay, so the next candlestick comes out, you see the wicking on the bottom side, you're like, no, maybe it was a false alarm, right? And then you see another candlestick, same doji comes out, which gives you another signal. If I was the trader looking at this trend and I see this, I would definitely get out here. This second one was my second warning to tell me that there's a trend reversal. So I will get out and I'll just take my profit, right? There's no point of risking. Okay, so let's move on to the next example. Okay, this is not example. Okay, so to sum up what we've learned with the Heiken Ashi, the Heiken Ashi chart is a type of price chart that uses daily average to show the median price movement of an asset. Secondly, the regular candlesticks display 4 different price levels of an asset in a specific period, but the Heiken Ashi candlesticks use data from the current and previous session to derive their values. The Heiken Ashi charts can be useful as part of a scalping day or position trading strategy. And when reading the Heiken Ashi candlesticks, the high is the highest value of the candle and the low is the lowest value of the candle. If the candle is green, the closing value is greater than the opening value and is represented at the top of the body. If the candle is red, the closing value is lower than the opening value and is represented at the bottom of the body. So the long-bodied green Heiken Ashi candle with no lower wick is considered indicative of a strong bullish trend, and a long-bodied red Heiken Ashi candle with no upper wick is considered indicative of a strong bearish trend. So because the Heiken Ashi candlesticks show the directional market trend, it can be useful to apply trend indicators, which I will show you later how we can apply trend indicators in order to identify the strength of market momentum. Okay. Okay, we're gonna create our strategy. We're gonna move on to TradingView to create our strategy. If you guys have any questions, do ask in the chat box. Don't be shy. The whole point of these webinars, the whole point IronFX created these webinars is to help you guys grow your account. Okay, so if you have any questions, go ahead, just shoot. Okay, so let me just pull out what I wanted to show you guys. Okay, so for those, right, who don't already have an account with us, you can head over to vip.ironfx.com/app. Okay, if you don't already have an account, just go to register now. You can create an account as long as you have an account with IronFX. You need a minimum deposit of $250 and you will be able to create this VIP IronFX account. So let's log in. Okay, so what is the benefits of having this VIP room access for IronFX? If you're a bronze, you get to create an account, which is a minimum deposit of 250, 1,000 or 2,000. You get an account. Silver is 1,000 and gold is 2,000. Okay, so what is good about this is that every day we will update this chart. So you can see here, we will update this chart's we'll update the fundamental news. So we'll update, for example, Euro news. So we'll say like the Euro USD rose noticeably higher to finish the trading week. We'll just update on like every day. The last time we updated was Monday. Okay. Then we've got GBP, we've got USD, JPY. Can we obtain the indicators? How can we obtain indicators? I will show you how to use indicators in a bit. We'll be going to TradingView in a bit. Let me just show you the IronFX VIP group. Okay, so on top of that, we also have all these major pairs, commodities, indices, cryptocurrency, forex pairs. Okay, if you just click into any of them, you will see that we do update regularly. We'll show you guys like, hey, price is still testing the key support level at blah, blah, blah. So we'll update information about any particular chart. And if you are new here, the good thing about this is because we have so many traders, right? We have a lot of traders on this platform. So you can just like ask one of our pro trader, for example. Let me show you guys. For example, you can ask trend line. Okay, you can draw a trend line. And then you can ask one of us, hey, Desmond, or maybe, hey, Cass, sorry, hey, chief trader, or whoever it is who sees your message, is this a valid trend line? Okay. And then now you can highlight the trend line. You can highlight the trend line, link object text, and click on this trend line. Click confirm, press enter, you send it. So whoever that was tagged, you can tag Desmond, you can tag me, and you say, is this a valid trend line? Whenever I come back, so even if this chart was deleted, if I hover my mouse over the trend line is going to appear, okay, so that I can assist you. So then when the chief trader sees this, the chief trader will reply to you, hey, so-and-so, this is not a valid trend line because a valid trend line requires 3 touches, but in this case, this trend line only has 2 touches and therefore it is not a valid trend line. Okay, so you can get all the help you need just by creating an account on the VIP, the IronFX VIP room. It is free as long as you have an account with IronFX, and as long as you have a small deposit of $250. Okay, cool. Okay, on top of that, the other thing I want to show you guys is that for those who are new here and need help with trading, especially the basics, please head over to our YouTube page. Okay, just type IronFX on YouTube. We have a lot of videos where we teach you guys like the basics, like it even comes in like different languages. Okay, so we'll teach you things like moving average, for example, Heiken Aishi for today, the total trading strategy. Okay, so there's a few different things going on. You can just come and explore. It will help your trading a lot. Trust me, I was once a new trader as well, and I wish I had this kind of resources. Back then, I didn't know where to find this kind of resources. I didn't even think to come on YouTube. Instead, I went on to those really, really expensive courses where I need to pay like thousands and thousands of dollars to learn like really simple things like moving average, for example. Okay, so do head to our YouTube. We have a lot of information there. It's completely free. It will help your trading a lot. Okay, so next, let's move on to trading view, where I show you guys how we can use the Heiken Aishi. Let's choose gold, for example. Okay, let's use gold, for example. We're gonna go, because today's topic is Heiken Aishi, so we're not going to be using your normal candlesticks pattern, okay? We are going here, candles, click on candles, click on Heiken Aishi. So there's different kinds of candles that you can use. This candle is the traditional Japanese candlesticks. We've got bars, okay? We've got the line chart, we've got line chart, we got baseline, we've got high and lows, line breakouts, Kaji, but today's topic is Heiken Aishi, so I will show you guys how to use Heiken Aishi. Okay, so click on Heiken Aishi. It looks similarly to the traditional Japanese candlesticks, but again, it's different. How? Because it starts in the middle of the last candle, and we already know why that is. It's because you take the high and low of the last candle and you divide it by 2, and that will be your opening for your next candle. Therefore, it's always going to be somewhere in the middle. Okay? Everyone following? Do I need to repeat myself? Everyone good for now? Okay, thank you, Joash. Okay, so let's zoom in because this is really important. The way that you use Heiken Aishi on its own, I will never recommend using a candlestick pattern or a candlestick on its own. Never, ever. You always have to combine it with other things, okay? Always combine it with trend, support and resistance, Fibonacci levels. Please share screen, thank you. Oh, do you guys not see it? Okay, can you see it now? Thank you, Christine. I'm sorry, I didn't know how long I was talking to myself for. Do you guys see the screen? I thought when I switch screen, it will automatically share. I didn't realize I have to keep sharing screen. Sorry about that. Okay, thank you so much. Thanks, Christine. Okay, so I'm gonna start all over again. So to get the Heiken Aishi, go to this area here. It will say, let me just go back to your normal. Okay, it will say, go to any particular chart. It will say candles, and then you get to choose your different kind of candlesticks that you want to look at. So we've got the bars, candles, hollow candles is your traditional Japanese candles, right? We've got the baseline, the line chart, Renko, line break, Kaji, these are all the different kinds, but because of today's topic, we will be looking at the Heiken Aishi, okay? For today's topic, we will be looking at the Heiken Aishi. Again, it looks like your traditional Japanese pattern, but the only difference is that it starts in the middle. The opening is always somewhere in the middle of the chart. Why? We have already established it's because you take the high and the low of the last candle, you divide it by 2, and you will get the opening for the next candle. Okay, therefore it will always start in the middle, somewhere in the middle of the last candle. Okay. Okay, so just to test you guys a little, to see if you guys were following earlier on. I just want to check if you guys remember if the wick of the Heiken Ashi candle is on the top part of the candle, does that signify bullish or bearish momentum? Can you guys let me know in the chat box so I know if you guys are still following, if I need to repeat anything? If you see the wick of the candle on a Heiken Aishi candle on the top part of the candle and the bottom part has no wick, does that signify a bullish or a bearish trend? Thank you, Christine. Thank you, Joash. Okay, thank you. At least you guys were following. It is really important. Okay, so I'll give you an example of how to use the Heiken Aishi. But of course, whenever we are looking for a setup in trading, we never ever just use one thing to look for our entry, our stop loss, and our buy. We always combine it with other things, of course. Always combining with other things. Okay, so if let's say I was already in this buy here, I would see this long wick here. I would think it's a bullish momentum, bullish momentum, bullish momentum, bullish momentum, bullish momentum. I will hold on to this trade until it gets to this doji looking candle, this doji candle, and that's where I get out. Okay, so that's just an overview of how you use the Heiken Aishi on your own one rough way. Now I'm going to show you guys how I use it with my other strategy. Okay, by combining other strategies. Okay, so let's go to the day chart. This is exactly how on a normal day I use to look for a setup. Okay, so as of today is the 16th of November. I am currently 4% in profit in my own trading account. Okay, I'm 4% in profit, and whatever I'm going to show you guys is exactly how I got my 4% in profit. Okay, this is exactly how I would find a trade when I'm trading on a daily basis. Okay, so first of all, I will look for trend. Trend is very important. I feel like looking for trend and identifying trend, you already win half the battle. Why? Because if you identify that it is a downtrend, it means that you are biased to get in for a sell. Okay, if you identify that it is an uptrend, you are immediately biased to get in for a buy. Okay, so you first need to identify a trend and you need to identify it on a bigger time frame so that when you go down to a smaller time frame, you can narrow down and fine tune where you think your entry is going to be. So how do you identify trends? Simple. The first things first, use a trend line, use a channel, or you can look for higher highs, lower lows, lower highs, higher highs, and higher lows. Okay, so in this case, a price was moving on a downtrend for the longest time. Okay, so I'm just going to use this trend line to identify the downtrend. And the fact that it's on a lower, it was making lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. It's confirmation of that downtrend that we are talking about. Okay, so one thing that I've noticed is that this downtrend has recently been broken by the recent candle structure. Okay, the recent movement in price. So the thing about not using Heiken Aishi or using candlestick pattern is that usually the traditional way of TA or the different way of TA is that traders, okay, so this is a swing high here. When price breaks this trend line and it breaks this swing high here, that is only when the trader confirms that the uptrend has started and the downtrend has ended. Okay, the problem with this technique is that from here all the way to here, you have lost so many points. Okay, you have lost so many pips. Your entry would have been so late. But if you were to use the Heiken Aishi, right? you use the Heiken Aishi. So the Heiken Aishi, remember, if the wick is at the bottom and the candle is red, it is a sign for bearish momentum. If it's green and the top part, the wick is on the top, it is sign for bullish momentum. Okay, so one thing that the Heiken Aishi would have already told you is that here, in this candle here, is already the possible trend reversal. Okay, why? Because the candle before it, there was wicks on both sides. Whenever there is wicks on both sides, when it comes to the Heiken Aishi, this is the first sign of trend reversal. Okay, this is the first sign of trend reversal. And then how do you confirm that trend reversal? The trend reversal is that the wick is on the top part. So you would have gotten in here for a buy based on Heiken Aishi's confirmation. You got it in for a buy, the wick is still on top, the wick is still on top, the wick is still on top. Until today, the wick is still on top. So from somewhere around 1666, okay, 1670, for example, you would have already been able to identify the possible trend reversal. You would have already been in this buy trade, and right now you are still in profit for that buy, and you are still not taking profit yet because Heiken Aishi has not told you to come up from that trade yet. Okay, so that is the beauty of Heiken Aishi. Heiken Aishi is that thing that is able to help you identify trend reversal before all the other things like the break of the swing high, the break of another swing high, okay, all these other things. Okay, so let's combine Heiken Aishi with all the other things. Okay, so how I would have gotten into this trade is that I would have, of course, already identified this trend line. First, I identified this trend line. Sorry, I wouldn't even use a trend line. I would actually use a channel because a channel would be valid in this case, right? That's a really beautiful channel. The break of the channel is my first sign of trend reversal. Okay, this break of the channel is my first sign of trend reversal. But when it just breaks, I'm not confirmed, right? It's not confirmed. So what I want to do is look for more confirmations, because a lot of times it could have just been a fake out. It could be a fake out break and it just comes back into the channel again. Okay, in this case, it wasn't. Okay, so the first confirmation was Heiken Aishi showing wicks on both sides. Second is that the wicks start appearing on the top side of the candle. So channel is showing bullish momentum, a trend reversal because of the break of channel. Number two, Heiken Aishi is confirming that. Okay, let's see what else. Number three, the break of this swing high is further confirming. If price continues to go higher, if it breaks this swing high here, that is even further confirmation that price is definitely reversing, doing a recovery, and gold is on its way up. Okay, so we're going to wait for price to break this 1798 area. This is a very crucial area. If it breaks here, this is going to be our entry for the buy. Okay, guys, just take notice for future reference. It's not going to be today because I don't think it's going to break today. It doesn't look like it's going to break today. Maybe next week. Okay, this is a very important area. Okay, so after I have identified trend, I'm going to highlight some support and resistance. Let me highlight some support and resistance. Why is support and resistance so important in trading? Support and resistance is your entry, stop loss, and take profit. Okay, support and resistance will be used as your entry, stop loss, and take profit. It is so crucial to be able to identify support and resistance when you are charting. If you cannot master support and resistance, I would think that you are losing a lot. Okay, there's probably other ways to trade, but from my trading experience, I find that identifying support and resistance will win you a lot of the battle. Okay, we've got that. Let's go down to the smaller time frame. Now, what we're going to do is combine. Okay, we're going to combine Give me a sec. Okay, before I continue, I want to let you guys know that before this webinar started, I actually placed an order, right? I actually placed an order for a sell at 1785. Okay, why? Because there is a strong resistance here. Okay, so for those who want to consider that sell, I'll let you know in a while why I got into that sell, but I'm letting you know that it's in that area of that sell right now. Okay. Okay, cool. Going back to the Heiken Aishi. Once I have identified that, I've identified trend. I'm right now currently very, very biased on getting in on a buy. Because why? Because momentum is showing me that it's a buy. The break of the channel is showing me that it's a buy. The break of the swing high is showing me it's a buy. Heiken Aishi is currently showing me it's a buy. So right now, the problem about wanting to get in the buy is that price is already on its way up. So what do we do? The good thing about trading is that price never moves in one direction. Okay, it never ever, it is so rare that price moves in one direction. It doesn't, never forever. So right now it's going up. What is it going to do? More likely or not, it's going to reach a point where it wants to do a reversal, a little pullback. It does a pullback, and that's where your Elliott wave comes in. That's a topic for a different day. Okay, your Elliott wave comes in, and here at the pullback, you get in for your buy. Okay, you get in for your buy here at the pullback. Okay, so where do I think the pullback will be? I think it's at 1720. I will show you guys how I get that number. Okay, so one thing I like about the Heiken Aishi right now is that it is showing reversal signal. Okay, do you see 1, 2, 3, 4, 5, 6? 1, 2, 3, 4, 5. Sorry, 5 candles have shown wicks on both sides of the candle. So again, remember, wicks on both sides of the candle is your first signal from Heiken Aishi that a reversal might be happening. So this area here, okay, Heiken Aishi might be saying, okay, that's enough. It's time for me to reverse now. And the pullback might be happening soon. Okay, so this is where the pullback might be happening. I'm a bit biased to get in for a sell right now. Okay, we're gonna get into a sell, but my overall trend is a buy. And how do I get my take profit? I go back to the normal candlesticks and I find the swing low, the closest swing low. That's gonna be my first take profit. Okay, this is going to be my second take profit if price even gets here, right? If price even gets here, that's great. But if it doesn't, that's my first take profit. This is my second take profit. And either from here, price is going to reverse and continue on its uptrend, or it's going to go down lower and it's going to continue on its uptrend. Okay, whatever it is, because we are just day traders, I'm only going to kind of forecast or kind of want to see where price is going from here to here. Okay, so let's go back to the Heiken Aishi. The day chart. So Heiken Aishi is agreeing with this analysis. Why? Because again, you can see Heiken Aishi is already signaling reversal. Okay, that's one. Number two, it's because if you go back to the normal candlesticks, you can see price tried to come here a few times and it was having a hard time breaking. I don't know if it's gonna break this time, but if it does, then this sell entry is gone. But based on the Heiken Aishi, so far it looks good. It makes me want to believe that there's a possibility that's going to reverse from here. Okay, other thing that I am doing that is supporting this analysis is combining this with Fibonacci levels. Okay, so whenever you do an analysis, 1.389, sorry. Okay, so the 1.45 fits nicely there. Although 1.45 is not a level that usually price reverse on, it is still a level to consider. Let me see what else I can combine there. So what I'm trying to show you is that how to find a setup is to combine different technical analysis, which I will not be able to teach you guys in one webinar today. You have to come back if you want to learn the rest of it. You're going to combine all of this together, and then the area with the highest confluence, okay, is the area you get in for your entry. Your take profit is where the last swing high and swing low is, and your stop loss will just be above that area you think price is going to reverse. Okay, so right now I'm biased that price is going to go down. I will show you guys in a while why I think that. Okay, no, Ichimoku is not agreeing. Stochastics. Okay, we can use stochastics. Stochastics is kind of agreeing. Okay. Okay, guys, I'm gonna run through again why I think it's a sell. Okay, so number one, overall, I think gold is a buy. Okay, overall, I think gold is an uptrend. Why? Because of the break of the channel and the break of the swing highs, the swing highs here and the break of things. But the thing about any chart is that it never goes in one direction. Before it keeps going up, it needs to pull back once in a while. Okay, so I am expecting a pullback. Why? Because a pullback meaning we're going to get in for a sell. Because number one, for our topic for today, Heiken Aishi is showing that there might be a trend reversal. How is it showing that? Again, I said because when they are wicking on both sides, that is Heiken Aishi's first sign to you as a trader that there may be, I'm expecting a pullback as well. Okay, nice, Musa. There may be a possible trend reversal. Okay, so Heiken Aishi is already signaling to us, yes, there might be a trend reversal in this exact area that we're looking at right now because of the 1, 2, 3, 4, 5, 6 candlesticks that looks like a doji or looks like a spinning bottom. Okay, number two, why do I think that it's going to be a pullback? There is a Fibonacci level here. Okay, so I don't usually take you guys for these webinars. Okay, so you probably would have never heard me give you this analogy. Okay, so this is a very important analogy. I use it every time when I'm trading. I think about it very often. Okay, so pretend this is you. Okay, this is a really badly drawn statement. You're going in the direction, you're going in the right direction. Okay, you're going right, you're walking to the right, you reach a door. The question is, if you can push the door, you can go into the next room. If the door is too heavy, if the door is made out of titanium, if there's a lot of rocks, there's a lot of boxes, there's a lot of obstacles behind the door will be, or if the door is locked, the door will be too heavy and you will have no choice but to reverse. Okay, but to reverse. Okay, so this represents price. The man represents price. The direction represents up or down, whether you're buying or selling, and the door represents support and resistance. Okay, so price right now is at our door, which is the resistance. And I do identify that there is some form of resistance at this door. Okay, why? Because number one, there's a 145 Fibonacci extension here. Although 145 is not a typical level that we look at, okay, it is also still something we should be considering. Okay, so I'll give you an example. Let's say in real life, you reach a door, you're trying to open the door, and you're wondering, oh, how come I can't open the door? Turns out on the other side of the door, there is a tiny lock. Have you seen those really tiny lock, those toy locks that you can break open with your hand? Okay, so this 145 Fibonacci extension represents that really weak, fragile lock. Although it's not a very strong Fibonacci level, I'm still going to leave it there just to say that there is some form of resistance. So that being said, I do think price is at an area, is at a door, and price is trying to push this door open. If price is able to do that, then it's going to break and price is going to go higher. But if price is not able to break this door, it has no choice but to reverse, right? Okay. Why do I think it's going to reverse? The resistance that are showing right now is the the candlesticks showing that reversal pattern. Number 2, the Fibonacci level. Number 3, there was something else. There is a little form of support and resistance in this area. Okay, it's not the best horizontal support and resistance, but there is some kind of support and resistance here. Okay, because we can see that price came here a few times. Every time it came to this area, it came here, it reversed. It came here, it reversed. In this area, didn't respect. It came here, reversed. So now it's back in this area. Is it going to reverse or not? We don't know, but so far the chances of reversing is it's there, but it's not the best. Okay, so the next reason why I think price is going to reverse there is because on the stochastics, we are seeing that price is reaching a resistance. So how we use stochastics is we identify support and resistance. It is now at a resistance. We expect it to reverse at a resistance. Okay, that's as simple as that. When I look at this setup, how confident am I that this setup is going to work out? I'll be very honest, I don't think this is a very strong door. I think there is some kind of resistance in this door, but if this person here is strong, that means if this bullish momentum is strong, it will not have a problem breaking this door here. They will not have a problem breaking this resistance, and it's going to go higher. Okay, but that being said, the Tenkan Aishi is already showing weakness in the momentum. Okay, it's showing that this person that is pushing the door is maybe tired. Maybe he already pushed a lot of doors. Look, he already broke this channel. He already broke this swing high. Maybe he's tired. So by the time he gets to this area, he needs a little break, and he might just reverse to this area. And then from here, he'll try again once he's fully rested, right? But this current point of time, we are seeing weakness in that bullish momentum. Again, take note that my overall bias is that price is going up. Price is bullish. It's just that at this current point of time right now, there is some form of weakness. So you can consider getting in here for a sell. I personally have a pending order ready at 1784. Okay, because I think the bullish momentum right now has weakened, and I don't think it can break. I may be wrong. If I'm wrong, then I'll just hit my stop loss. That's totally fine. I'll just move on to my next trade. So the thing about trading is there's nothing to do with like a feeling. There's something to do with, oh, I feel like price is going to go up or down. You just collect whatever information, technical analysis or the charts is showing you, and then you make a decision. So based on all the decision that I've collected, I am a little biased that the bullish momentum has weakened and there's a possibility of a short pullback, a very short pullback. Okay, a short pullback means that if you get in here for a sell, don't expect it to go back down to 1,500. Okay, a short pullback means a very short and small move. It's just enough for you to make some profit, and then move on to your next trade. Okay, so let's say this trade were to work out. We are looking at a let me see what's the risk to reward. Because our stop loss is so tight, our risk to reward will be somewhere about 1 to 2. Okay, 1 to 2. That means if you have $100,000 account, you're risking $1,000 to make $2,000. So if price really goes to our stop loss today, we'll be losing $1,000. But if it goes to our take profit, we'll be making $2,000. Okay, so these are the kind of trades that you will be able to get. Honestly, if I have to rate my confidence level in this, I would say it's only a 60%. Why? Because usually I don't like taking trades that are going against trend. So right now the trend is definitely bullish, right? We are very biased that price is bullish. Okay, we are biased that price is bullish for sure. So going in for a sell is like going against the wave. So if you are taking this trade, please be super cautious. I do have a pending order here, but my lot size is smaller than what I would usually risk. Okay, usually I will risk 1% per trade, but because this trade is going against trend, my risk becomes 0.5%. So let's say I have a $100,000 account, I'm risking $500 to make $1,000. Okay, And that's exactly how you would be able to find a trade using the Heiken Aishi, which is right here, combining it with indicators, Fibonacci levels, combining it with trend, combining it with other things. Okay, I hope to see you guys tomorrow. I will be taking you guys for the live trading analysis session. The live trading analysis session, I won't be using Heiken Aishi. I'll be using the strategy that I normally use. I do use Heiken Aishi once in a while, okay, but then I usually on a daily basis, I just use the traditional Japanese candlesticks. Okay, look, the traditional Japanese candlesticks is showing bullishness. Okay, but Tenkan Aishi was showing bearishness. Okay, so I will see you guys tomorrow. If you guys are joining, hopefully we get to find some trades tomorrow. Hopefully we get to make some shopping money tomorrow. I'll see you guys tomorrow. Bye guys. Thanks for joining. Bye.